Good morning, good afternoon, good evening, everyone. Thank you so much for joining this webinar, which is brought to you by the Impact Investing Institute in association with Kirtham and supported and sponsored by the Catalytic Capital Consortium. Today, our topic for discussion is Bridging Divides, Catalytic Capital for a Global Just Transition. Bridging Divides, Catalytic Capital for a Global Just Transition. Now, that's a lot of words, and I hope over the course of the hour, we would find a way to get a bit deeper to understand what this theme means, what the implications are of this theme for a just transition, what the implications are for linking capital to impact. And I really encourage everyone to post any questions you may have for our speakers in the Q&A box. We will have time to have a discussion. This is meant to be a conversation. Now, just a quick introduction. My name is Bafo Utubuatan. I'm a board director with the Impact Investing Institute, and they also say I'm a lead expert. I don't consider myself an expert. The one thing I think I'm an expert in is listening to others, and that's what we're going to do today, listening and learning from each other. We're very fortunate to have a really solid panel of practitioners, of consultants, and of catalytic providers who would make this discussion an enriching one. I think it's important to know that this session is being recorded, and it's also important to know that this session has received so much interest, which really goes to show the relevance of the topic today. Now, we are facing an important global moment where we're seeking an energy transition that is socially equitable and inclusive. But there is a tension between the need to reconcile a focus on climate for a lot of global investors with what happens on the ground, which is the focus on the broader socioeconomic development needs in emerging and frontier markets. And there's a large funding gap that remains, and we need to mobilize private finance to bridge this gap. So that's why we're talking about bridging divides. Now, we've seen recently that there's an increasing emergence of specific vehicles that can support innovation from actors based in emerging and frontier markets. And the just transition is an opportunity to bridge this divide to ensure that sustainable investment globally is equitable and can help local development needs. Once again, I want to acknowledge support from the Catalytic Capital Consortium, C3, which is composed of the MacArthur Foundation, the Rockefeller Foundation, and Omidyar Network. So enough talking from me. I don't even like the sound of my own voice. I'm going to ask the speakers if they could introduce themselves. They could turn on their videos and microphones on and introduce themselves. They'll each have 90 seconds to introduce themselves so that you get to know them better. And then we'll hand over to Yana to give us a deeper introduction on the theme. So I would start with Ermi from the Catalytic Capital Consortium. Just 90 seconds.
Thank you, Bafur. Wonderful to be here, and a big thank you to the Institute for the work it has done. And we're going to be talking about that a little bit now, as well as all of you who have joined the call at this time. In my part of the world, it's 7 a.m. So anybody who's here from the US, thank you and welcome to all of you further east, I'm sure it's very, very late in the day. So as Baffour noted, the Catalytic Capital Consortium is what brings me to this conversation today. But of course, I think all of us are deeply, deeply engaged in this work. A quick introduction for myself. I am part of the Impact Investments team at MacArthur Foundation, which along with Omidyar Network and Rockefeller Foundation started the Catalytic Capital Consortium. I'll speak a little bit about it down the road, but it is investment learning and market development initiative that is focused on deploying catalytic capital in order to help achieve the global goals and create a more just and equitable society. So with that said, C3's work spans investment and grant making, as well as building a significant community of practice. I also bring my MacArthur hat. MacArthur has been making impact investments in the US and beyond for about 40 years. We have deployed close to $800 million over this period of time, working with a range of social enterprises, intermediaries, and other actors in order to address needs in underserved communities from thematic areas ranging from climate all the way to SMEs and working closely with financial intermediaries in the US. I'll stop there, Baffour, and hand off to the next person.
Wonderful. So Hamdia, over to you. Let's try to keep the introduction short.
Thank you. Thank you, Baffour. So my name is, I'm sitting in Accra, so it's a very good afternoon from Accra, and good morning wherever you are, or good evening. It's really a pleasure to be here, and thanks to Impact Investing Institute for actually putting this together. My name is Hamdia Ismaila. I'm a fund manager. I represent Savannah Impact Advisory. We're an advisory firm, Impact Advisory firm, and we also manage funds. We are currently working on raising a fund vehicle, investing across West Africa that has some very important pain points in the design, because we're looking at really raising money locally. And Emmy greatly supported us during the design phase, and so through the C3. So I would like to really say thank you, and then really happy to be here, and I'm sure we'll discuss that further. Thank you.
Thank you, Hamdia, and keeping this going. Andrew, over to you.
Thank you, Baffour. My name is Andrew Ahiaku. I'm the head of financial sector for Aceli Africa. Aceli benefited from the gracious grants of C3, spearheaded and championed by Umi, so we are grateful. Aceli is a market initiative that supports partner financial institutions to increase lending to agri-SMEs. We currently operate in Kenya, Rwanda, Tanzania, Uganda, and now entering into Zambia. I went out of Nairobi, but currently on holidays in Accra, so good afternoon from Accra.
Thank you, Andrew. And before I hand over to Yana, who's from Kirtham, I think it's important to acknowledge another partner for this event, the African Venture Philanthropy Alliance. Thanks so much for joining this table. And Yana, over to you.
Excellent. Thank you, Baffour. Good morning, good afternoon, good evening, everyone. It's great to be on this call. My name is Yana van Deventer. I am a research manager for impact investing at Kirtham, and Kirtham is a research-led consultancy firm, and we research, design, and implement impact investing solutions from policy to products for clients across the entire spectrum of capital. I'm based in Johannesburg in South Africa, but we work with clients across the continent and also in the broader emerging market space. So we have been working for the past couple of months closely with the Impact Investing Institute to develop this guide. It really builds on work that Kirtham has been doing on mobilizing capital at scale for the just transition in the South African context, but also beyond the South African market, as well as building on the Institute's work and the work that they've been doing on the just transition, including the Just Transition Finance Challenge, which is a initiative that also seeks to mobilize institutional capital for a transition to net zero where no one is left behind. The Institute's also developed the Just Transition criteria, which some of you might be familiar with, the Just Transition stool with those 3 legs, which says that in order to qualify as a just transition investment, you need to consider climate or environmental action, improve socioeconomic distribution and equity, and also increase the community voice. So this project was really born out of the imperative of localization if we are to ensure that a transition to net zero is really socially equitable and just. You know, we need investment solutions for both transitioning in and transitioning out. In other words, activities that will help create new and inclusive green economies and industries in an equitable and just way. And this looks different for different markets. So it's really important to have that local context in mind. And at the same time, for transitioning out activities, which refers to the greening of heavy emitting industries and will include, of course, decommissioning, for example, of coal power plants in markets like South Africa and Indonesia. So this guide is really a practical guide. It's aimed at articulating what the role is of catalytic capital in helping to achieve a just transition that really puts at the heart the local needs and local context, and also to ensure that the funding structures and opportunities that have arisen are really, you know, embraced because a lot of interesting and exciting things are happening, and we can overcome some of the barriers. And a final comment just on the guide, it's really a practical tool. It's practical in terms of demonstrating to catalytic capital providers the entry points of how they can get involved, including, for example, mission alignment, unlocking additional private capital, and of course, prioritizing local stakeholders. I will pause there and hand over back to you, Bafur, because that's quite a mouthful, and look forward to the discussion.
Thanks so much, Yana. I think you've given folks a good appetizer on what the guide is about. I would encourage everyone to go and download the guide from the Impact Institute website. It's been posted in the chat box, and it's a result of a lot of work, and we are open to comments and feedback. Now, to get into our discussion for today, I think I'll start with Ermi. You know, MacArthur has been a pioneer for a long time in the area of catalytic funding, and the MacArthur Foundation is one of the anchors of the C3 initiative. And in fact, even in the introductions, we could hear from the panelists that the C3 initiative has been influential in helping them structure these on the ground local initiatives. Can you speak a bit more to this project and how it supports localization while making sure that environmental and social considerations are, you know, part of the agenda? And I mean, one of my basic questions sometimes it's, why are you doing this? I always ask the why. Why are you doing this? You're supporting, you're providing financial support. You could do other things. Why this? And how does this fit into your larger program?
Thank you, Bafur. I talked a little bit about what the C3 goal is, and I would like to situate this particular project within our larger frame and initiative, going directly to your question of why, right? I think that this work obviously speaks to a thematic area which is critical in our times, the need to address climate change and a multitude of ways in which those efforts are underway and need to be underway in different markets in different forms. And we'll go a little bit more into the specifics and details as this conversation progresses. I would like to sort of maybe talk to the role for catalytic capital in addressing some of the key challenges of our times. When we started the initiative, our goal was to really highlight and share the contributions that catalytic capital can and has made and should be making going forward in addressing some of the more intractable areas where you have particular challenges of why capital is not making its way to certain users, whether it's certain communities, whether you're talking about innovative use, whether you're talking about new undefined markets as in different parts of climate adaptation, and then where there are not structured models for financial and economic engagement, but the need is really urgent if you think about different revenue-based and other models that have been created. The idea behind this was to have a grant program that could let us both ensure that people have been made aware of some of this work. So one cohort of the grant making that we did focused on building the evidence base, and that did work in places as varied as the US to real estate in India, all the way to crafts and artisans in India, right? The second piece, which was our second large grant call, of which this project is a part, was focused on fostering solutions in infrastructure. And this really talks to efforts that are trying to facilitate deployment on the ground of capital, right? So this is talking straight to the issue of what are the models, who are the actors, how do we get action rolling on the ground? And so I really want to call out the action orientation of this handbook that Jana also mentioned just now, which is to say that all of this is supposed to have practical and pragmatic use on the ground in local economies. We have a wonderful list of attendees to this webinar. I'm hoping that many of them will take this back to their own markets and start conversations around how this can influence ongoing projects, things they're planning, and the design of work. And I think that in some ways the handbook has a methodology and approach that goes beyond issues that are directly tied to the just transition and climate questions, but are more broadly tied to how do we enable change that addresses very, very challenging social issues. I would sort of say one more thing. I think all of us have a lot to say. It's always a challenge to figure out what to include. For us, this work complements efforts on multiple other fronts, through the cohort of grantees that C3 has supported. And we have a separate investment piece, which I'll talk about briefly, is we have found that many of the projects bring together some very, very key themes. So I will give you an example. This aligns very closely to work that has been done by our partner, the Global Impact Investing Network, where as part of their project, they looked at institutional engagement in climate infrastructure in emerging markets. And looked at the question of how do you facilitate that? And many of their sort of findings of what is needed in the context, in the enabling markets are not that different from where this guide lands on what needs to be in place for just transition projects and efforts to be successful. We also supported work with Prime, which is an intermediary based in the US that works to provide investment funding in climate efforts. They developed a training for intermediaries that are looking to raise catalytic capital funds and how to think about the framing. What are the key questions? Why is this money even needed? Why can't we just go to the capital markets? And it is interesting to see the through lines between that and this work. And of course, then, we have other elements, including a series of guidance notes that were published for investors coming out of our learning labs that were run over the last year and a half, I would say. And there again, the recommendations for how investments can deepen the engagement with catalytic capital projects going far beyond the capital itself, right? The financial dollars coming in. And again, I think all of those pieces have a very interesting sort of resonance with where this handbook has landed. One last piece I would note, which kind of sits over all of this, the purpose of all of this is to increase investment in the form of catalytic capital. And there, MacArthur, as part of this initiative, has committed up to $100 million in initiatives that we have supported. These are investment opportunities all over the world, across sectors, across regions, which are all working to deploy catalytic capital on the ground. Thank you, Bafur.
Thank you, Ermi. That's I think all of us need to go to the MacArthur website. There's a lot going on there.
And the C3 website, I'll put that in the link. Thank you.
There's a lot going on there, and I think all these different modules are creating change on the ground, and it will be good to hear from those on the ground who are, executing that change. So I will now turn to Hamdia from West Africa and Andrew, who works from East Africa, to find out, how is this working on the ground? I think for Hamdia, I'll just ask, as a fund manager based in West Africa, an emerging or frontier market, what perspective from the ground do you bring to this transition to net zero to ensure that it is a just transition?
Thank you, Baf, for us at Savannah, and based on where we sit, a just transition it's a way for us to look at advancing progress towards SDGs. So, for example, the fund we're working on, Chigaba, is Progress, and it's called the Progress Fund because the idea is to try to progress the attainment of the SDGs. We see our investments in SME space as a way to advance responsible production and consumption. We want to advance decent work and economic growth. We want to reduce inequality, and we also want to support affordable, clean energy, among others. So generally, we are looking at inclusive growth and reducing, a lot more of the footprint that we have, especially because West Africa is essentially very much agrarian. We do a lot of agriculture. So we need to look at, responsible production around, agriculture. How do we bring in climate smart agriculture to be able to reduce, those footprint, and also to really be able to improve food security, because we see it all along, this year, for example, it's been very hard. The time that we don't expect the rain is when it rains. And the time that, you expect the rain is when it doesn't rain. So like food security issues. So really to bring it down locally in terms of the kinds of investments we are doing to bring it down home. So that's how we look at it. We look at it more in terms of to advance progress against, achieving the SDGs, which is very central to what we are doing. Thank you.
Thank you, Hamdia. So advancing progress towards achieving the SDGs in a very holistic manner. Andrew, from the ASELI perspective, how do you see this transition to net zero and the just transition as well?
Yeah, thank you very much, Bafu. So to start with, ASELI is data-driven. And so when we started, one of the first things we did was to conduct a research in our markets to find out what is necessary, what the gaps are, and what should we be doing. The culminating effect was that we need to support partner financial institutions to increase lending to agri-SMEs. A bit of a history. So ASELI was started by a network of social lenders called CSAP, or the Council for Smallholder Agricultural Finance. However, based on the context of localization, we have to tweak it a bit to now include the non-bank financial institutions based in East Africa, and more importantly, the banks in East Africa. So currently we have about 38 lenders, but the highest number is from local banks. And what we did was to make sure that we buy impact, because one of the early things we found out was that lending to agri-SMEs was risky and the returns were lower than expected. So in order to encourage lenders to increase lending to agri-SMEs, with the support of the C3 at the design stage, we started by buying off impact. And once you buy impact, then you rebalance from a loss-making bank to a profitable loan. Beyond that, we introduced a minimum impact level in order to cap and involve everybody. So though the support is going to SMEs, these SMEs must be supporting a minimum or buying from 25 smallholder farmers or selling to a minimum of 100 smallholder farmers. So that is inclusive and not leaving anybody behind. If you look at our impact structure, we cover climate and environment, very critical. We cover gender inclusiveness. We cover youth inclusion, and more importantly, food security and nutrition. Because we are data-driven, after a year when we collected another round of benchmarking data, we noticed that although we were doing very well in the youth impact area, doing well in the gender area, we noticed that funds going to women-owned businesses and youth-owned businesses was lower than expected. And same to the climate and environment. So we introduced a special impact bonus so that for when an SME or a lender lends to an SME in the core areas that I just mentioned, women-owned, youth-owned, and climate and environment, will reward you with an additional impact bonus. And this way, we are able to deepen the localization, leave nobody behind, but reach more to a lot more people. And that is how we push the frontiers of the just finance. Make sure that we are greening the economy, but in a manner that is just, in a manner that is fair, and in a manner that gives voice to even the locals. Thank you.
Thank you, Andrew. I think it's quite inspiring, the work that you are doing, and the fact that you're being driven by data. You look at the outcomes and you revise the program to reflect the outcomes of the ground. It's inspiring what, Hamdia, you are doing on the ground as well to address the SDGs. These are excellent initiatives that are affecting real lives and livelihoods. But the issue is we're having this conversation because there's a barrier, right? And we are trying to bridge that divide. So, Yana, I wanted to ask you, what are, in your research around this guide, what are the key barriers to localization that sort of emerged? And it would be good for us to identify this so that we know how we carry ourselves forward.
Thanks, Baffour. So I think if, again, just want to encourage everyone to have a look at the guide because it goes into much more detail. But if we look in context of local fund managers and some of the barriers that they are grappling with, so we see it's really difficult to navigate funding landscapes. So what this means is that the funding that is available is limited, and it's often quite difficult for local fund managers to translate what funder mandates are and to translate these into workable investment vehicles or financial instruments. So funders may have, very specific mandates. They might have a climate mandate, but not necessarily have a social lens as well, or have a more social mandate, but not necessarily a climate lens. So it's really difficult to find the type of funding that is fit for purpose for the investment vehicles that are being developed in the local markets. And the role that catalytic capital can play to help overcome that barrier is to really collaborate with the entire domestic ecosystem and networks, and to act as that bridge builder between the global sources of capital that are available and making sure that those sources are fit for purpose for the local needs. And examples of some of the organizations that are doing that, this includes the Collaborative of Frontier Finance. We've got the AVPA, and that's also involved with this event, African Venture Philanthropy Alliance. And then, of course, all the national advisory boards for impact investing in their respective markets. All of these organizations are trying to play that role of translating and supporting the local fund managers to make sure that they can decipher what the funding mandates are. And then another one that was quite prominent is the inflexibility of potential investors. So private investors tend to have very standardized, inflexible mandates as well as reporting requirements. And of course, there are sometimes regulatory limits or prescribed allocation policies that determine what private investors can and cannot do. And often, local fund managers, their business models or their funds or their strategies and financing vehicles do not necessarily align with investor requirements. And then the role that catalytic capital can play there to help overcome that barrier is to really be flexible. This is flexibility in terms of the risk and return profile, absorbing some additional risk, enabling, that would help enable they are able to support projects that other fund managers might consider too risky, or if the fund is perhaps a little bit deemed not sufficiently liquid, so if there's liquidity constraints. And then also, of course, through designing vehicle structures that are fit for purpose for particular investments. So those are some of the key ones that were identified for local fund managers, but a lot more detail in the guide.
Thanks so much, Yana. So another reminder to check out the guide. There's a lot more information in there. And we're happy that we've started to get some questions, and this would enrich the conversation we are having today. Ermi, I think localization is really a strong focus. Why does this matter to yourself as a catalytic capital provider, and how have you tried to make that a priority?
Thank you, Baffoor. Local managers and local actors, I think, are central to our interpretation of what is needed, or what is one of the key things that is needed in order to make our work in impact investing and catalytic capital investing and beyond successful. Our work historically in the US has always focused on local communities and those who are embedded in those communities, serving those communities. We have worked with community development finance institutions, CDFIs, in the US for decades now, which embody that particular approach. In addition to that, I think what we are seeing is emerging over the last, I would say, few years, a little bit more of a conscious and deliberate effort to include the voice of local communities beyond sort of local managers and actors who are providing the financing to begin with, but really incorporating the voice and the experience of those communities in terms of what should be prioritized, how it should be delivered, who are the actors who should be in the picture. With our work at MacArthur, we've also supported a group called the Collaborative for Frontier Finance. They might be on this webinar. And one of their focus areas has been really helping fund managers that are coming up through the system in local settings in emerging markets across different continents, but with a primary focus in Africa, really helping them access the resources and the networks and the capacity that is needed in order for them to function. Much of the investment, as we all know, in impact investing often comes from overseas actors and typically from DFIs and public agencies in many markets. And I think over the course of the last several years, we have seen a very conscious effort to turn this focus a little bit into local actors, including the local institutional actors that Hamdia talked about and others have referred to. I think all of this makes the work much more long-lived and sustainable when it does happen, because the local engagement makes a significant difference in the uptake and the continuation, which I think all of us are always worried about the longevity of different solutions that are implemented and how all of that can find a life of its own going forward. I think that, Makata has also been working with different actors that have built in community advisory boards in their governance structure. We also funded out of C3 in the Fostering Solutions cohort, work with Invest Appalachia in the US that is building a catalytic capital investment fund and initiative where members of the local community are involved in every step of the investment decision-making process, right from selection of what is going to be done to how it's going to be done to what kind of impact and social measures are utilized. Similarly, another partner of ours, both through MacArthur and C3's work, Pacific Community Ventures, has done an excellent job of incorporating community input and voice into the design of the financial services and instruments they're putting out in the community. I would just say sort of one last thing. I think that, we all need to acknowledge this sort of the ability and the success of sort of bringing local actors to the table depends on a lot of factors, and we are in the early stage of starting this work. So recognizing that, I think it's very important for all of us to be laser focused on it and make this a prime factor in the design of different initiatives we're trying to get started and continuing in different markets. Thank you.
Thank you, Ermi. Let me come to you with one of the questions that popped up from the attendees, because you mentioned that we're still at a very early stage, right? And there's a question from Patricia where she wants to know if there's any initiative related to catalytic capital in Central America, whether there's anything like that in place, or if there are any plans on exploring that opportunity.
Thank you. There is a lot of work that happens in different parts of the world. I would not presume to say that we are privy to all of it. We do have networks across different regions, though, because C3's goal at the outset was to bring together different communities in different sectors and regions across this theme of catalytic capital and then not be separated by thematic groups. We have a partner, Latimpacto, which is a network of impact investors in Latin America, and I'm happy to connect folks to them. They will probably have a little bit more information on local actors on the ground. But I would say that I think catalytic capital is at work in almost every market around us. It may be called by a different name. It might be a blended finance transaction. It might be a DFI-funded project. But concessional, flexible money that is focused on the impact that can be created and that can bring in other kinds of money by being the risk taker in the transaction exists pretty much in all markets and in all sectors, maybe just in different levels of maturity and depth. Thank you.
Thank you, Ermi. I'm trying to make this a bit more exciting, including the attendee questions. There was one question that I think Yana has answered around the useful instruments that are being deployed on the ground. I think I'll go to Andrew for a follow-up on that. From the ASELI perspective, what have you learned from developing structures or instruments that have attracted diverse sources of capital, including, the catalytic and commercial sources?
Thank you, Bafo. So at ASELI, our instruments are in response to the findings from our research. As I mentioned earlier, one of the early research we did was that, or the findings were that lending to the sector, and agri-SMEs, was twice riskier than expected. So in response to that, we introduced a first loss cover, but at portfolio level. Then I mentioned earlier that the returns to partner financial institutions was 4 to 5% lower than expected. And this is driven by the high cost of originating loans to especially smaller agri-SMEs. So in response to that, we designed an initiative called the Origination Incentive that's supposed to defray the cost of doing loans to agri-SMEs. Again, we noticed that most of the SMEs were not bankable. So in order to address that demand, we introduced a technical assistance to the SMEs. And in order to improve the knowledge base of the partner financial institutions we were dealing with, we introduced capacity building for lenders. All this is underpinned by a strong focus on data and lending. So our instruments include a portfolio first loss cover that operates as a credit guarantee, an origination incentive that supports to defray the cost of doing loans. And on top of this, there is an impact bonus that drives lending to high impact areas, including gender, food security, climate and environment, and youth inclusion. And finally, capacity building for lenders driven by a strong focus on data and lending. As a result of this, the ASELI intervention tends to appeal to an array of investors or donors. And ASELI is a donor-funded initiative. We are multi-donor funded, and we are happy that as a result of funding from AMI and MacArthur Foundation, the C3, we moved from the design stage into implementation and have brought on additional multi-lenders. The challenge has been because we have multi-instruments and we operate in different geographies and segments. One donor may be interested in our portfolio first loss cover, whereas another may be interested in an origination incentive. Some of them are interested in only the capacity building, whereas others will be interested in technical assistance to SMEs. So we do attract both restricted and unrestricted funding. But overall, it goes into a bigger pot and allows us to drive the change that we want in a just and a fair manner. Thank you.
Thank you, Andrew. I'm doing this balancing act of questions from the audience and to the panel, and I'm trying to keep this thread running. I think in what Ermi said, in the past, impact investing in emerging and frontier markets usually used to be from overseas, right? But increasingly, we are beginning to see more localization of resources. So Hamdia, for the Chigaba Fund of Funds, how has the design focused on attracting local institutional capital in line with that?
Thank you very much, Bafo. And just to say that I think Yana did mention a couple of issues that we were trying to solve with Chigaba around addressing barriers to local capital providers, because we need to support local capital providers who are based locally, who understand the deals, who can do small ticket size kinds of investments so that we can grow for inclusive growth. So we set out to design Chigaba. We worked collaboratively locally with the National Advisory Board for Impact Investing, called Impact Investing Ghana. We wanted to see how we can really mobilize local capital. So we have a pension system that invests all its money in government securities. So what the Impact Investing Ghana did was to create a collaborative with pension funds and just try to understand what the needs are and why we have not been able to see money coming into the productive sectors of the economy. And there is 3 issues. One of it is that they had issues around risk, around liquidity, and then also on the returns. And so when we were designing Chigaba, we had this at the back of our minds. The problem we wanted to solve was to make money available to local capital providers to support SMEs for inclusive growth. These local capital providers can't raise money mostly outside because they don't have track record and they have all kinds of other issues that confront them. So we set out to design and raise a fund-of-fund vehicle to be able to support these local capital providers to deploy capital locally. And so we wanted to have local capital. So what did we do? We needed a certain level of flexibility in the design to be able to meet the liquidity requirement of the local pension funds. And we also needed to address the issue around risk, whether it is perceived or it is real risk. We needed to really deal with it, and also the issue of return. So the discussion we had as a team was, how do we then infuse catalytic capital in the structure that works for the local institutional investors to be able to unleash, long-term, for us to be able to unleash long-term benefit. So we designed a structure, a blended vehicle with, catalytic capital providers, so that we can have a base and then build on it, bringing in the local institutional investor because of the needs that they are required. So we were also looking at specific kinds of catalytic providers. We were looking for catalytic providers who are patient with long-term horizon. We were looking for catalytic providers who were flexible and who were also risk-taking. So this is the discussions that we had based on the research, based on our stakeholder engagement, that help us infuse the design of Chigaba. So Chigaba is a blended vehicle, and it is a fund of funds. And we're going to invest in local emerging, local capital providers to invest in SMEs. We have two layers of the design. The base design is for catalytic investors who are going to stay with us in the long-term horizon, more patient and more risk-taking. And then we have a top layer with the local institutional investors, pension funds specifically, who will come on top with the lock-in period in and out as their liquidity issues arises. So that is how we were able to infuse the needs to build a design that works for all. Our intention is to be able to raise more money locally so that over time, we can actually bring more local capital for the development of the local economies.
Thank you, Hamdia, and thank you to Andrew as well for explaining how these structures have come together. Sounds like a lot of work to get these things done. I wanted to come over to Yana. I love conversations where there's a slight touch of controversy, so this is good. There's been a question raised about where there is a tension between social and climate issues in the field of investing. And I think related to that, in a way, the just energy transition partnerships, if you look at the South African context. How do you think we should consider these sorts of issues? And over to you.
Great, thank you, Baffour. This is a really interesting question and a topic that's very close to my heart. And I think it's one that it's one of those discussions that have to be had in the context of what the local realities are. It's very difficult for a market like South Africa, where you've got exceptionally high levels of unemployment, people still living in poverty, to not include the social, the social issues when you talk about climate. You simply cannot see the two in isolation or try to find solutions to climate or social in isolation. They're not mutually exclusive. Both these issues need to be considered in the context of the local market and what the realities are there. And that's why it's so important, I think, for providers of catalytic capital to have that engagement with local fund managers, investors, and communities to understand what the community's needs are and where they are coming from as well. Because if you don't have buy-in from the communities, it will be very difficult to, you won't be able to force climate solutions on communities if you don't consider what the implications are from a social aspect. So that's some of my views on the sort of the friction that we sometimes see on the climate and social aspect. And then in terms of the JETPs, Just Energy Transition Partnerships, so we, from the research, it's one of the areas that we see it's an opportunity for governments to get involved as well as providers of catalytic capital. So, and catalytic capital can really play a vital role in strengthening the impact of JETP mechanisms. So you can deploy grant funding to projects that are perhaps not bankable, but are vital to the just transition. And then at the same time, you can also attract other investors to help fund some of the more secure parts of just transition projects. So you need both sort of grant elements and then use that funding to crowd in commercial capital. It can also be used to fund proof of concept. I think Hamdia has given an exceptional example of what that might look like with the Chigaba Fund, which I'm very excited about. And then, of course, that critical role of catalytic capital to just absorb higher risk and lower returns, to make sure that you can attract more conservative investors into the deals. In terms of the practicalities of JETPs, I think that it's hard to take these from concept to practical reality. I think South Africa, as an example, the JETP IP was agreed to back at COP26. It's now 2 years later, and we are still trying to figure out how best to implement that. I think that's something also just to be quite pragmatic about. The just transition, it is a massive task that we are trying to tackle, and we don't, not a single country or government or investors, folks that are investing have it all figured out. We are learning as we go, and it's important to make sure that we do learn from what others are doing so that we don't repeat mistakes, and that we can be more efficient in accelerating the financing and mobilizing financing for the just transition.
Thank you, Jana. I think you mentioned the just transition is a massive task, and there's a question from the audience, last question from the audience, asking what role we see other capital markets playing in this catalytic conversation. So insurers, investment consultants, even lawyers and accountants. So Ermi, I don't know if you have any thoughts on that, because people want to play a role. People are motivated. What can they do?
Yeah, so thank you for that question, Bafur. And it is a challenging question, and I think it symbolizes something we're seeing across different communities of stakeholders in our work with C3. There is huge engagement from different sets of actors that want to contribute, that know they have value to give, but creating the structure which allows them to engage, learn more, and then figure out where they can actually be doing something is tricky. So I would say just more broadly that the Catalytic Capital Consortium has in effect developed a community of practice by virtue of the work we've been supporting and our partners have been doing through the last 3 to 4 years, and we are looking for ways to make that community broad, accessible to many of our partners that are impact investing networks in different regions in Africa. That is AVPA, one of the sponsors of this webinar. Are really the ones that are bringing different groups of stakeholders and different types of actors, not just the impact investors that are providing the catalytic capital, but beyond, into the conversation and into different opportunities. I would just say that more broadly, I think that all the resources that we can mobilize to this work are needed and urgently needed at that. So it falls a little bit to us to begin to create those structures for engagement and provide groups that opportunity to come in. But to the folks that are maybe on the other side of the table and listening in on this conversation, I would say, reach out to local actors that are working on projects, that are looking at different projects, and In this day and age, I think that almost every market has a series of quite visible investors and other community members that are working on specific projects on the ground. And I think that's the place to engage. For those who kind of want to know and learn more, come to the C3 website, look at all the community news and knowledge that we put out through our LinkedIn page. Please follow us there. And specifically for local and private investors, institutional, beyond, I will say this has been a long-standing conundrum for us, how to mobilize and activate that local set of resources, both in the US and across different markets. And I think there, again, there are no magic bullets, as in with everything else. We need to go out and make connections with our community, give them pathways to engage, and not all of that engagement will translate into a dollar invested in something. But I think the process starts with educating and spreading the word, and then providing on-ramps to engage at different points. Maybe some folks kind of initially want to see who is in those transactions and deals from their community. Some people are ready to start designing their own fund. Some people are just interested in learning more about what's going on and different ways they can engage. It may not mean that they're providing the investment capital per se, but engaging in many of the other ways that are described in this handbook. Thank you.
Thank you, Ermi. I think that's a fantastic call to action for all of us. I want to say a big thank you to all the attendees who joined in. I want to say thank you to our panelists, Ermi, Yana, Hamdia, Andrew, and I want to say thank you to the C3 Consortium, to Kutham, to AVPA, and to the Impact Investing Institute. COP28 is a few weeks away. There's a lot to do. There's a lot to learn. There's a lot to share, and there's a lot to engage on. But we cannot do this in a theoretical manner. Let's engage, and let's also make sure that we are keeping the right focus on the development of people on the ground, on the economy, and on climate. Once again, thank you all for being part of this wonderful forum. It's been a pleasure to have you here, and do go download the guide. Have a great rest of the week. Bye.